Hey, Doggy. Thanks again for doing this. I got a really good question this time, and I know that a lot of people wonder about this one because it can affect them directly. And some people, don't know where to go and they get exhausted by shopping around. So, to get straight to the question is why do lenders lend different amounts? Why does one lender lend more or less than another lender?
Great question. Um, it's a great question. There's lots of different ramifications with each of the different lenders, and this is where brokers can come in. So lots of banks have different appetites when it comes to different scenarios. So you might come in with a different kind of an income. Someone might have, a base income plus they might earn some commission because they're on a sales type role. So they might have lots of rental income, and that's shaded at different banks.
So basically they don't all take you're basically saying they don't all take the same numbers. Why is that? Is that because sorry, I know I cut you off there. I just wanted to interject on that bit. Why is that? Is that because they have different advice around what's risky or not?
They do. They have their own treasury departments and their own risk departments who actually look at a base set of statistics about lending at the moment. They look at their own existing book, so they'll say we have this bunch of loans and these ones are failing and these ones are going really well. Let's move more down that path. And we call that bank
Yeah.
appetite. So it's each of the lenders has a different appetite for a different kind of risk and they have funders as well. So wherever they're getting their money from, they'll be interested in they'll have different kinds of appetite as well. So
Because that also kicks in when you're trying to buy in different areas too. Like some banks, you'd think that it would be semi-blanketed, right? But they actually have different opinions when it comes to like where you buy too,
yeah,
don't
and
they?
that's surprising to a lot of people as well.
Yeah.
When you tell them things like that, people get really surprised that you could just across the street in a different postcode could have different ramifications. So it's worth knowing things like that up front too, so that you're not surprised.
Yeah.
Particularly investors
Yeah.
get surprised by
And it's
that.
really hard though. Yeah, and it's really hard though to know all of that
Mm.
because unless you're actually in the industry, and I mean, how many lenders do we have in
Oh
Australia?
gosh, I don't even know, but like
Like
I
80
have a lending panel
something
of something like
more?
40, so there's probably more than that.
Yeah. Yeah. So unless you're like in the industry and constantly checking, it's hard to know what's best, where to go, who favors what. And I know I do want you to go back to the original question, but that is why, guys, I always suggest that you work with a finance strategist, someone who it's their job to be working through the industry day in and day out, and that someone is working for you, rather than going direct to a bank where they're working for the bank. Does that make sense? At least I hope so. All right. Sorry, Stewie, back to you. So, what are the key things that make if we were to pinpoint, yeah, what are the key things that make lenders lend different amounts?
Yeah, I would say incomes. I would say the a number of children can be treated very differently. Lots of lenders treat monthly living expenses quite differently, which is probably something we should talk about later on. Monthly living expenses. That's very topical at the moment.
Yep.
And the property is very different. Like people are going to treat properties very differently. And I would say probably a big one is incomes and how people are structured in their work environments. I find that lenders, can be will lend this much and one will lend this much, and they're completely differently. Hmm.
Yeah.
Well, I'd just go back to sitting with your mortgage broker and just really nutting out how your scenario is. Um, if ever I'm putting my own personal loan together or a mortgage broker's loan together, we usually like try to think very much ahead, and we try to say, I'm going to borrow again in around about 6 months or 12 months, and I'll have myself set up for that. So I'll be making sure that I'm doing all the factors that I need to do to have my income up, or if I'm going low doc, I'll go for myself or someone else. I'll make sure that their accountants are in order. So we're constantly in contact
Yeah.
with their accounting professionals and how they're set up like that. And I really recommend people doing that like ahead of time and do that constantly so that
I know people
you
just
know, I
don't
have
do
people that
that.
call me and
Like
say,
you and I do that, think
no,
about
they
that because
don't.
we've been in the
Yes,
industry, but people don't think like they go, "Oh, that was such an effort to get my loan sorted," and then they sit back and they leave it for a few years. But really, you should be
mm,
revisiting it, once to twice a year, really,
yes,
and it becomes easier that way. So
yes,
because it's about
yep,
planning. I used to say it's like playing chess. You're planning a few moves ahead. You're not planning to just
yep. Great way to put it.
just to get this one loan, this one property. And if you do
Yeah,
it like you don't set yourself up for the plans ahead, it can be really costly and more so extremely stressful. So it's better to actually have that
yes.
sort of forward-looking plan, don't you think?
Yeah. Talk to your mortgage broker all the time. Like keep in contact with them. I'm thinking about taking this new job. That's not a bad thing to ask a mortgage broker.
Yeah.
And my pay package would look like this. How would that affect my borrowing? Like you work with a lot of investors all the time, Isa, and
Yeah.
those people should be constantly in contact with their brokers as to how anything's going to affect. I'm thinking about getting a new car and taking a lease for that. Tell us about it. Let's see how
Yeah.
that affects you.
And even
Yeah.
these days, like, especially when you're coming up to some big purchases, that require bigger mortgages. And for example, just this market is overrun with homeowners right now, or wannabe homeowners as well. And
Yeah.
in the last
Yeah.
few years, more than ever, we've seen banks comb through their bank statements. Like I know when I was broking and working with you and even after that,
Yep.
um, they didn't do that to the same degree, and now it's like if you have a
No.
regular pattern of going to the pub or a regular pattern of going to the TAB, this could be picked up, and it could be
This can be picked up.
yeah, it could be considered a regular expense rather than something that's just
Yeah.
discretionary, am I right?
Yeah. So, that's where another lender might look at that not so bad. And this lender might say, oh, no way, we're too risk averse in that
Yeah,
area. So
yeah,
yeah, that's where running those sorts of tests
yeah.
early on is good
And so
and
that's
constantly.
why you got to work with your finance strategist, and they can do the combing through before the banks do. And they'll act as like an interpreter between you and the chosen lender in the end. So on that note, I think that's a really good note to finish up on. Thanks for that, Stewie.